connections, because right now you're investing in deals that you think are sexy, that's great, but 5 years from now, you're gonna want your money back. And you want to make sure you're working with platforms who know how to collect, and that's gonna be the difference between the winners and the losers.
Brent, anything to add in terms of observations? Agree, disagree?
Yeah, I would agree that the whole notion of curation is really, really critical. And I mean, people that have been successful in this business are investing along. I mean, the value proposition, I think, is for the average investor to invest alongside the most talented investors. And I think that's where you're going to see some real success, where you leverage that knowledge and then make it available to John Q. Public. And I think when that happens, I think that's a tremendous potential for everyone involved.
The difficulty with curation, by the way, is that curation is also extremely limited by the current Jobs Act, and another reason for Jobs Act 2.0. One other thing that I think is an issue right now in the current Jobs Act for crowdfunding for securities is that the platforms are not permitted to co-invest with the investors. And what we're finding, at least at DealStruck, we actually fund the deals up front and then allow our investors to invest after the fact, so the investors feel more confident because we bought into our own underwriting. The problem is with the Jobs Act, that's not permitted. And so with equity-based crowdfunding, that's something that I think people are going to start expecting, and it's not currently legal.
So what you just said is something of a hybrid approach when it comes to crowdfunding. Is there anybody else out there doing it in spaces other than yours, or in your space? Or
well, I mean, sure. I guess they're either called direct lenders or peer-to-peer lenders. And so we say that we're a hybrid, and we believe we're the first marketed hybrid company at DealStruck. But you know, for instance, On Deck Capital, they're funding the deals up front, and they're taking hedge fund capital on the back end. But that's not peer-to-peer. Then you have Lending Club and LC Advisors who are taking people's money, pooling it, and then investing it. I don't yet see very many platforms who are actually taking founder money, investing it first, and then allowing the crowd to co-invest. And I think that's a really interesting model.
Got it. Okay, switching gears again to Scott. You're in the real estate sector. What sector besides real estate do you like? Like, if you had to invest in any one sector other than your own, what would it be and why?
I'm passionate about education, and I believe that, along with, ironically, you've got health, if there's another industry that needs to be completely shook up, it's the education space. Be it schooling, be it university, be it courses. You know, in the old days, people would go to events and we would say, look, if you run to the back of the room, we'll give you a special deal and you can buy this book for half the price. That's 20th century thinking. And I think this whole 21st century of thinking of collaboration is going to completely change the way that education works. As an example, if you look at the website that Khan University, how many of you have children in this room? Yes, no? How many of your children walk in and ask you to help them with their homework on an algebra equation? And none of you can remember from 30, sometimes 50 years, but my point being is it's difficult, it's a challenge. Khan University, what about this from a completely different mindset? Why should I go and learn from my teacher the same stuff that we're all going to learn, and then go home and ask my parents as a tutor how to get the results when they don't actually know? Why not sit at home and get the lessons and go to the school to do my homework where I can be helped out in terms of the thought process and the training? That's 21st century thinking. You know, if you take education, if you take health, if you take schooling, you know, the problem is that the 20th century businesses are ox wagons. Tucker mentioned it, and they're gone. They don't know they're gone yet, and they're still selling ox wagons. But trust me, it's going to happen a lot quicker than what happened when the motor car came along. And for me, education, along with medical, along with real estate, in my opinion, are the three biggest places that are going to make the biggest difference. And wherever you make a difference, you know, that whole principle of Zig Ziglar, if you help enough other people get what they want, you can have anything you want. And that will be the difference.
So Brett, now you, and don't feel pressured to say real estate.
I was going to say real estate, but now I'll follow your rules. I think obviously real estate is a great one. I think the consumer area, I think, is working. I mean, I think Circle Up is probably the most successful, I think, and the first really to capitalize on this. And again, it's because people can touch and feel and really even make that connection. I think what's going to be interesting, and I don't have a notion of how this will work, but just government, just the notion of the way that our government functions and how the internet could begin to play a role in that. I realize that's not a business enterprise. I don't know what the answer is.
Ask Egypt how that worked in.
Okay. Well,
No, but exactly that. It was an Arab Spring because they had social proofing and they got rid of their government.
yeah, and so I think right now our country is facing a tremendously difficult period ahead, and that we have a Congress that completely does not function, polarized set of politics. We've got legislators that are out to kill each other as opposed to try to find some legislation that works. And I think we're really facing a very, very difficult time in this country from a policy point of view. And I just think that maybe the internet and crowdfunding principles might play a role. And working on that. I don't know the solution yet for you, but I'm hopeful that maybe some people in this room would have some ideas, because we are facing a very difficult time ahead.
Joy, with you and your firm, you work with a number of different sectors. What do you see as the most promising?
There's a couple that I think are the most, one, real estate, because it has an underlying asset behind it. Two, highly curated debt platforms, and then three, platforms that have large affinity groups that are attached to them. So like, it's a platform just for snowboarders or, soccer players or some other very niche vertical that has a large affinity group.
Can I add to that though? Because I think there's something else that needs to be added to this. Is that if you take eBay and Amazon and you put them together, they do not equal Alibaba as a business. If you take Fundrise and Realty Mogul and put them together and times a few zeros, they do not equal Prodigy. And we're sitting here trying to decide whether it's real estate or health. Maybe it's the emerging world and not the first world. And what people need to understand is the benefits, the pros and the cons. I mean, where crowdfunding is going to go is that it's going to provide a bridge, because people in the first world want to invest in the emerging world because there's better returns, but they're worried about economic risk, political risk, legal risk, and currency risk. And crowdfunding will be able to dilute and take that away. And people in the emerging world, we live in fantastic countries, but we have political risk, economic risk, etc., currency risk, and we want to buy your assets and earn your currency and earn your income. But we also have concerns and risks and fears. And crowdfunding, with all the benefits and beauty of social proofing and technology, will build those bridges, and that is how the world will go global properly.
Candace, we're not going to leave you out. Which sector?
Well, you stole my idea. So what I would do, if I were to start another company someday, is I would copy the most successful sites in the United States, and I would take them around the globe. What we have found, one of my early investors invested in a debt platform in China, and that debt platform just copied Lending Club and created Lending Club of China, and it is 5 times the size from a revenue perspective. I think that the real opportunity, quite honestly, is to say, okay, what has worked in some of these highly regulated countries, whether they be in Europe or in North America, and then let's replicate those in developing countries.
So,
You're 100% right there.
I know I am.
I mean, look, in this room you've got 100 clever people. You probably have a good idea, and 99 people want to compete with you. In South Africa, you have a good idea, and everyone goes, "Bravo, go for it." You know what I mean? I promise you, it's easier to earn 10 rand than $1. I guarantee it. And all I'm trying to get at is that's the beauty of the emerging world. And I mean, stats that people don't even know in this room. Do you know that Africa, by this year, 70% of all Africans, 1 billion people, will have a mobile phone, and within another 3 years, that'll be smart technology. Now, right now, they can't even spell the word investment, and I'm not being facetious, it's the truth. But imagine when it's as easy as Facebook, and now they can start to create wealth. And rather than not having access to real estate or anything else for that matter, health or education or business, it doesn't matter. Imagine when they've got access to that, and they can start to create wealth. Imagine the impact that will have on the whole planet.
I wish you would just get excited about this. You're just so bored.
So you're touching a little bit actually on my final question that I want to ask to each one of you. And then if we have time, if anybody wants to ask a question of the panel. But we heard earlier, and I believe this as well, that whatever we think the industry is now or what we think it's going to be in 2 years, we're going to be surprised. It's going to look very different from where it is today. Starting with you, Joy, tell us where you think the surprise is going to be in the crowdfunding industry 2 years from now.
I think the surprise is going to be how many existing businesses actually start to launch crowdfunding campaigns. our crowdfunding platforms. So Bank of Alberta, they launched a donation reward crowdfunding platform that they could go and they could send their rejected loans to use that as a mechanism to basically sort through and find companies who had large affinity groups and could be successful. I've seen Amex at so many different crowdfunding events. I think they've been at like 10 or 11. Coca-Cola launched a platform. One of my clients is UC Berkeley. They're doing a enterprise level crowdfunding executive education program because there's so much interest in how crowdfunding can be used to validate, validate market demand for a product, right? Focus groups, who needs that? Why not get paid to why not have the crowd go ahead and pay you to create the product, whether you're Warner Brothers crowdfunding Veronica Mars, or whether you're a bank, Bank of America that's looking to not lose the, not lose those loans. So it's going to dramatically change everything, I think.
Let's go down the line. Scott?
I think the really exciting thing will be the intersection of social proofing and what Brett spoke about in terms of the data that can be, the whole artificial intelligence that can be kept, and ultimately what people are going to be able to do is they're going to be able to have that information and it's going to be on their telephone. Like literally, I foresee that in a couple of years I'll be able to sit here with my portfolio and I'll say I've got $100 and I can literally slide with my finger and I can put it in Australia now. And then what I think is going to happen is that based on all the facts and data and research and all the systems like this, what that'll do is that say I want to retire in 10 years, it'll literally go, the moment I've moved my money to Australia or I'm intending to move to Australia, my investment horizon to retire might go to 14. Because as an example, my currency last year lost 24.08% against the US dollar. You've got to be doing a hell of a lot right to not be going backwards. So, and most people get emotional and they don't actually understand the impact of their investments. So if you take the data, the social proofing, and you mix it with mobile technology where it's all sitting here, every single investment I own around the world is on one phone, that's where it'll get really, really exciting. And again, I think banking, insurance, medical aids, and every other industry where there's a middleman that we don't like will be gone.
Brent?
Great question. In the healthcare business, I'm not quite as confident. And specifically, you think about technology in healthcare has advanced tremendously, as fast as it has in the tech space. So why has the cost of healthcare continued to go up, yet the cost of computing is going down? I mean, they're both advances. This is technology. The costs are going down. The reason is the government's involved. The government involvement of the regulatory platform slows this all down. And so my concern would be tremendous innovation and opportunities to improve care and everything else. It's just not going to get to the market as quickly as it could because essentially of regulations of the government.
Candace, what's going to be the biggest surprise 2 years from now?
Well, I think, I don't know if it's going to be a surprise, but I see the direction. 2 years from now is not 10 years from now. I don't think we are going to completely disintermediate all bad intermediaries, although that is aggressive, so thank you for that.
When I was in my bank yesterday in America, I hope they go soon. Andrea was with me.
Okay. So I'm not that aggressive, but what I would say is I do think that a combination of group due diligence plus transparency plus intelligent underwriting or intelligent platforms equals dramatically decreased defaults. I think that you're going to see that combination is going to be quite interesting for weeding out bad deals, for weeding out bad entrepreneurs, and for helping us to better understand risk. I also, 2 years from now, there will be a secondary market. And I'm really excited about the secondary market opportunity, and I do think that the secondary market in crowdfunding very likely will not replace, but will heavily compete with the mutual fund space. I think that with the up-and-coming investor, the investor that's my age, the rising accredited, we look for a lot more information. We look for far more transparency, and I think that crowdfunding is going to replace quite a bit in the mutual fund investing space.
Terrific. Let me ask you, does anybody have any questions for anybody on the panel?
I think Candace has got it right. I think we need more mechanics in the whole system, particularly with risk. Now, this is a funding expo, but this is about finance, coming and going. and it's about the managers and the fundraisers' ability to manage finance effectively. So underwriting, risk control tools, those alone will probably pave the way for a strong secondary market. I think it will kick in with something that looks like an ETF to start with, and I think more and more people will gain confidence. We'll see it emerge and become the animal that it's going to be.
About Jobs Act 2.0, what I'm worried about is if it's introduced before the current Jobs Act is finalized, Title III, and whatever the case would be, because Title III is the issue at contention. I don't want to see the clock kind of restarted again, where it's going to take another 2 years for Title III to come out. By the way, I think Jobs Act 2.0 might get traction, because I just got an email that Congressman McHenry was just appointed the deputy whip. So like McHenry's the guy who brought the Jobs Act, all that. So that just happened just 2 seconds ago. But I think, what do you think about Title III? Do you believe it's better to have something now, or potentially wait 2 years to maybe not even see unaccredited investor crowdfunding happen in Title III? I think that's the bigger risk.
I think that, let's not be confused. So Title III will move forward one way or the other. This legislation has passed, it is law, and now we're simply working through the regulatory process. So, and I can also promise you that we will not see a Jobs Act type of legislation pass nearly as quickly the second time around as it did the first time. So you're not going to see a new bill be introduced in the next 6 months. It's going to take quite a bit of time because we saw, like, it's taken us 2 years since the first bill was passed just to create the regulations. So I know Joyce probably got some opinions. I'm not speaking on behalf of any organization, only on behalf of myself. But I would say that I don't think that that's a well-grounded fear, because I think that the Title III is going to move forward. The regulatory process for Title III is going to move forward with or without any new proposed legislation.
I would agree with that, with the caveat that I've heard a lot of rumors that the SEC is kind of sitting on their hands to see what happens with with Jobs Act 2.0. The only thing is that there's definitely not the political will there. The Democrats are sick and tired of hearing the word crowdfunding, and some have even said that they wish they would have never voted for it. So there is not, and elections are coming up. There's so much going on politically right now that it's, I don't think